Hi, you guys. Let's talk about the truth about home ownership and taxes. A lot of times when taxpayers own a home, they go into the tax company and they're assuming that they're going to get this big deduction or a lot of money back because they own a home. And it doesn't work like that. Actually, in many cases, a lot of homeowners are not even able to write off their interest and real estate taxes that they pay for their home on their taxes due to them not exceeding their standard deduction. So let's talk about it. If you own a home, a lot of times you're told that you'll be able to do the loan form. That's what it's called in tax term, but ultimately it's a form Schedule A. Now, what the Schedule A is it's a itemized form where you take certain personal expenses and you're able to come up with a total sum to see if it would exceed whatever your standard deduction is based on your filing status. So some of the things that goes on this particular form is medical expenses, real estate taxes, state income taxes, general sales tax, mortgage interest, mortgage points, charitable donations, cash and non-cash. Those are the most common expenses. And then your Avalon tax for your tag. Those are the most common expenses that goes on a Schedule A. Now, with those totals of all those different expenses, if you qualify for them, that total has to exceed the amount of your standard deduction. So, for instance, the head of household standard deduction is like $20,000, I don't know, 300, something like that. So the total amount on that particular form has to exceed $20,300 in order for it to calculate on your taxes. Not only that, just depends on how much you pay in your taxes, would determine if you would get some of that money back based off you being able to claim that itemized deduction. Ultimately, the itemized deductions lower the dollar amount that you're going to be taxed on, just like the standard deduction. You have an option that if you do qualify and that total do exceed your standard deduction, instead of taking the standard deduction, you're able to use that total to reduce the income that you're going to be taxed on. Now, why a lot of homeowners are not able to actually take that deduction is because a lot of homeowners do not have expenses that over exceed the amount of their standard deduction. And a lot of the deduction doesn't work like people think, because you drop off donations to somewhere and they say, oh, this tax deductible. People automatically think that it's deductible. They don't realize that, one, you have to put that deduction with a whole lot of other deductions to get a total amount. And then two, each one of those deductions has special guidelines in order for you to be able to calculate them. So for example, you can't just write off your medical bills. Your medical bills have to be 7.5% of your AGI. So that means ultimately, if say you made $10,000, I don't know what the total would be, like 7.5. Okay, yeah. If you say you made $10,000, so your standard deduction would have to be, I think, $750. But mind you, that's too low. Okay, if you say you made $100,000 and you did 7.5%, like your medical expenses would have to exceed $7,500 in order for the medical expenses to even calculate on that particular form. So you see how that kind of works. The same thing when it comes to charitable donations. You can't just write off charitable donations. You have to, you're only able to write off charitable donations if you have other expenses on that form that helps you exceed what that standard deduction is. So for my homeowners, you always want to take a form called 1098 into your tax preparer to see that if you have the total amount of expenses to exceed your standard deduction, to see if that will benefit you on your taxes. Now, again, a lot of taxpayers don't. Why? Because a couple of years ago, they raised the standard deduction. And when they raised the standard deduction, it became very hard for a lot of taxpayers to have expenses to exceed their standard deduction. So if you ever went into a tax company and they told you you could not claim your home, this is the reason why. Every taxpayer is not or do not qualify to file their home on their taxes. So for more tax tips, follow my business page at Expert Tax Service or follow me at Gwinnetta Wright on all social media outlets. And I am Dr. Gwinnetta Wright, your tax and business strategist.